So, folks, before we get in, welcome. And by the way, Jeff, welcome. Lance, welcome. And for those of you who are new here, we do this every week. We don't really have many discussions before we get on here. Each and every one of us has completely different ideas. We don't follow each other. I mean, we follow each other and we listen to each other, but we don't necessarily do what the other does. We have independent minds. So just because Jeff does something doesn't mean I'm going to do it, or just because Lance does something doesn't mean Jeff is going to do it. That's the beauty of it all. You want to have as many different type of opinions as possible. It would be kind of weird if we all kind of agreed on everything we did, and it would be kind of odd. So let's start off with Jeff. Lance, we started off with you last week. Let's start off with Jeff. Jeff, before we get into the nitty gritty and get into the specifics, we had the CPI yesterday. We had the PPI today. The numbers were awful. Wanted to get your 5 cents on it. Tomorrow we've got retail sales, consumer sentiment, and it's a short week. So we've got a lot of things on our plate. What's going on with you?
CPI came in not horror show bad. They were whisper numbers out of the White House the day before that prepare yourself for shock. They might have been thinking about this PPI number. So for those of you guys at home that don't know the difference, consumer price index is the CPI. That was yesterday. Producer price index, which came out today, was the highest print in history of actually the statistics. So that to me was something that really opened my eyes. PPI, for those of you at home that are keeping score, also is a leading indicator for where CPI is going to go, because producers figure out how much it costs to produce something, and then they mark up the price of that and pass it on to consumers as that becomes discovered. So 11.2% PPI. We had 8.5% CPI yesterday. It's a horror show for consumers. It's a horror show for everyday folks trying to make it work. And the biggest scam about it was, and yeah, Robert saying Putin's PPI, like inflation just started last night, like I was born last night or something. This thing's been going on for the better part of a year. We've had north of 5% prints on both of these things since last September. And these guys have been continuing to expand the balance sheet. You know, I'm a monetarist. You know, it's a big word for economists out there, but you control the money supply. You control a lot of things. You control liquidity. And these guys took the Fed's balance sheet from $4 trillion to $11 trillion. And up until last month, we're expanding it. So we're going to deal with the downside of that. Stocks don't care, and sometimes in a half an hour basis. They don't care on a 2-week basis sometimes. But I do maintain that they will care in a 6-month, 12-month basis, specifically growth stocks.
Gotcha. Lance, let's ask same question to you. We've had a lot of data. And also, I just want to add one thing to what you're saying, Jeff. I also think that the PPI wasn't as instrumental today because this Friday we're going to have industrial production as well. So I think that's going to kind of give the second part of the puzzle and the retail sales. So I think the markets are also waiting for that, because you kind of have to have those two together to get a full sense of the picture.
Yeah.
Again, I just wanted to add.
Yesterday they were putting out reports on Yahoo and CNBC all morning about how the market didn't care until the last hour. They suddenly cared, and then they switched their reports up to say, well, inflation was a problem. So
actually,
let's wait and see. Let's see how we close.
More than the last hour. I think the first half of the day was up, and then it started. But yeah,
I said it collapsed. It went from being like super bid in the morning,
right,
to like
right,
down,
right.
Okay,
we had a 80-point reversal.
Right.
Yeah, 80-point move.
Yeah.
Right.
Booze.
Yeah.
So Lance, what do you make up of the data? Are you looking forward to tomorrow's retail sales report? Have you had enough Fed data for the week? I know it's a fragmented week because Fridays are closed. Just want to get your 5 cents on it before we get into specific questions.
I am completely not concerned with the Fed, bank earnings, all this crap you're hearing on TV right now. I think all you're going to hear about is earnings upcoming, and you're seeing that with JP Morgan, Delta today, and retail sales. I haven't seen this aggressive call buying. And actually, as Jeff was just talking, we just saw about 600,000 worth of Macy's calls come hit the tape. I haven't seen this aggressive call buying going back from Friday, which we did American Eagle for wiretap. Stock's up about 10% since then. Those June calls I don't even want to look at right now. I sold those way too early. I cannot explain how aggressive the flow is in retailers, not only from Friday to today, but and of course you're seeing the typical, weekly calls and, strictly for retail sales numbers coming and, next week calls. But today we're actually seeing some longer term positioning, like in Macy's, the November 26 calls were just bought. Those calls, they're at the money calls. You rarely ever see November options trade in Macy's, like when they hit the tape. So if you look at Capri, TPR, they had really good luxury, the luxury items, the Michael Kors, Kate Spades. Great numbers came out yesterday. If you look at names like Nordstrom, a phenomenal move over the past few trading sessions. Like I'm shocked to see this kind of flow, how aggressively it is. It has been a long time since I've seen this. Could it be as well that travel stocks are catching a bid? Like we see Delta and the airliners and some of the cruise liners today. Is that contributing to the move in retailers? Probably. And we're having some, oil numbers start to stabilize, I guess we can say. But wow, I'm really looking forward to the retail sales number.
So now that we've heard from Jeff and we've heard from Lance, let me give you my 5 cents on this whole thing. So I actually agree a little bit. I'm a little bit more leaning towards the Lance side of the equation because I have actually seen exactly the same thing in retail sales. I've been short Ross, and I've been getting my head handed to me. So it's been just awful. But yeah, I have been seeing, and actually consumer discretionary today and yesterday was the number one sector. The numbers don't lie. Here's what I found very interesting. And again, I just want to, and this is the thing. We all have different opinions and point of views. But when I was looking the other day, I want to show you guys something interesting. I want you to get your take on this before we get into the nitty gritty. And I also think a lot of the opening back up stocks are starting to rally because it doesn't look like we're going to get COVID in the US in the summer, but hopefully I'm not speaking too soon. But I wanted to show you guys something interesting. If you look at the individual sectors, and these are just the 11 sectors that we all look at, we were the last time, if you look at communication and if you look at technology, they almost and also consumer discretionary is not all that far off. They sold off quite a bit, and most of these went almost all the way down to the base. Now they're rallying. But if you look at the Dow, or let's just look at the SPY, it's easier to look at the SPY. The SPY is actually remaining. Let me just kind of go. It's easier to show than to explain. The SPY, I think, is remaining near this level, and so is the Dow, where most of the speculative sectors that were in line with the Dow are coming back down. My point, here's the point I'm making. I'll make this point in a very short way. We had a Dow before this massive up move here. Most of the sectors were down, except for the energies and consumer staples. As we went up here, several sectors went up. A few sectors went back down, but most of them did not. So what I just showed you here in this example, how if you look at communication sector, the weakest sector, it almost erased all of the gains. If you look at technology, it erased almost all of the gains. But if you look at the broad market, it hasn't. It's still near my support level, which is telling me that we may be bottoming out on those speculative sectors here because those, and it's easier to go back and forth because those energy and the utilities and the consumer staples and the real estate are still holding up really, really well. They're not moving along with the rest of the market down to that base. So technically, I'm starting to see some divergence between the weakest sectors and the broader market. Now, does that mean that the bad times are over? We can go back to the Kathy Woodstock? Of course not. Let's not be real. Let's be realistic here. There's a huge chance that we're going to go south. There's probably as much of a chance that we're going to go south as we're going to go north. So don't take what I'm saying and what Lance is saying is that we're just like these two ultra bullish guys that are like, and I don't want to speak for Lance, but I'm assuming Lance,
No,
you're worried,
yeah,
right? About
to be fair, just because we're seeing all this call buying today or since last Friday doesn't mean this stuff cannot change like that. Like to give you an example, I was in Gap this morning, stock ripped 15%. You're darn right I'm going to get out of it. You know what I mean? Like I'm not saying, hey, oil's not going to go up and the market's not going to have volatility. I'm just saying for a quick trade, there's been an amazing move in retail. You understand what I'm saying by that?
Yeah. And lastly, I just want to show you guys one more thing, and then I want to jump back to Jeff, and I want to get into some specifics. Another interesting thing that I've noticed, and I've noticed this for the first time actually since this war started. Ignore this AT&T. I don't know how this got in here. It looks like it's just an error. So start at the second line. If you looked, actually, I'll show you. If you looked a month ago, let's go back 1 month ago. Most of these stocks, 90% of these stocks were energy natural gas stocks, right? This is March 14th. Look, Occidental, Mosaic, Apache, Halliburton, Baker, NOV, Chevron, Marathon, Conoco, Devon. All of these are energy stocks. Now, we go back to today. And again, ignore this AT&T. There's a lot more there's a lot more basic materials, utility, and consumer staples in here. So, like for example, Nucor, Nielsen's, Dollar Tree, CF Industrial, Mosaic. The number one stock is not even energy stock; it's Mosaic now, which is a basic material stock. So, I'm starting to see a little more broadening of the S&P 500 away from just energy stocks. So that's also a good thing. So right now, the way I would interpret my opinion is I'm very scared. I'm very nervous, but I'm starting to see a minor sun at the end of the tunnel. That's my 5 cents. Jeff, let's go back to you right now. What is the number one stock to buy and hold right now, in your opinion?
For how long?
That's a good question. That's a fair question. How about for the next 30 days?
The next 30 days. That's a good question. I'll give you two stocks, but they're
please.
One is buy. Sometimes I feel like I get interrogated on this show, but I digress. And I'm not the bad guy, and I'm not just the bearish guy. I also trade actively.
Of course.
I just am answering the questions that are posed to me. So
today, it is a trick question, by the way.
The sun is out, but we also had a fake out breakout like a week ago that everybody was getting all hot and horny for, and then the market fell out of bed again. So I've been just a little bit skeptical that we're going to make new highs. I still don't think we're going to make new highs on the S&P 500. I'll bet anyone on the panel that, whatever, you write the number. But one of the stocks that I believe in is also a retailer, but they're a low-end retailer. Dollar Tree, DLTR. Check this out. I want to show you guys something.
Look at that.
I'm going to share my screen.
Jeff Icon over here.
Please.
Oh, check this out.
Yeah. Great stock, by the way.
Look at this chart. This is a chart that was never in doubt. This is a chart that's breaking out and making highs. And there's a reason for that, because when shit gets too expensive, everyone goes down a level. 6 months ago, I had my 9-year-old chowing on filet mignon on steak night. Now it's a little bit tougher. Now it's a little bit of tougher cut of meat that we're getting acquired to. And so shit rolls downhill, as proverbial saying goes, which leads you straight to Dollar Tree. Now, if you look at the last time we had a recession in the country, and I'm in the recession camp, no question, Dollar Tree from December 2007 until December 2009 went up 86%, while the S&P went down 24%, and the QQQ was down 10%. So it's the best of all worlds. You're playing that retail. People are still going to buy stuff. They're going to still be out there. They're going to still be spending. But I'm doing it with 1 foot out the door, because I think that we might be in a little bit of a bearish way and a little bit of a recession. I just don't see how you have prices keep going up, rates exploding. You got the 30-year at 5%. Like, money's got to come from somewhere. I don't believe in the magical money tree. I don't believe in fairy tales. I don't believe in happy endings. I'm a cynical guy like that. And so at some point, you got to pay the piper. Now, are Amazon and Apple going to continue to be world-beating companies and make a lot of money? Yes, of course. Yes, of course. But you should and could and can time into those trades too. And the second stock, which I don't have like a whole research report prepared for, I think something's up with Twitter. I think Musk is going to make we're watching like the technologist, entrepreneur of my generation, the Gen X guy, turn into like a Carl Icahn before our eyes. He's becoming an activist. And when someone that is the richest man in the world, the smartest guy perhaps, from a business standpoint, becomes an activist, look out on the upside for that stock. He's going to get what he wants. And some woke soy boys ain't going to stop him because he's going to let people say what they want. He's going to get what he wants if it means driving the stock north. So those are two that I got for you.
Interesting. I'm completely with you on Dollar Tree. I love that stock, and that's been one of the top stocks for the last like 6-7 months. That's been killing it. We've done that trade a lot. Not so sure. I'm just not feeling it with the Twitter. But you're right. The rule of thumb is you don't invest in the company, you invest in the people running the company. And boy, oh boy, he sure makes a big impact on the company.
They've done a terrible job at monetizing that business. They have a great platform. They're an unbelievable media property, but they're horrific managers of a business. And it's because they're ideologues. It's because they have a certain thing they want to do with it. And this guy doesn't care. This guy likes to make money, which for me, I like to bet with people like that personally.
Right. Jeff, sorry, Lance, go ahead.
The new Twitter CEO after Dorsey stepped down is absolutely horrendous. The guy's, as Jeff would say, a woke soy boy.
Soy like soy milk.
Yeah, there was reports.
I would know nothing about it, but that's what they call it.
There was reports that the employees are apparently this morning having a lawsuit against Musk for, or not the employee or shareholders, because he bought the stock and kind of hid his filings and kept share prices lower. And then you've had reports of employees who want Musk off the board because he's too controversial and stuff. I mean, in my opinion, he's just going to buy the whole damn company.
Yeah.
I think that's going to happen.
At a much higher price. He's going to drive the price up. He doesn't care. He's been buying it already. And it's going to go higher after he buys it too. So
you definitely don't want to short stocks that it's very controversial. It'll become a lot more controversial at this point. That's what I think.
Look, if he goes full Carl Icahn, that's a good thing for a stock share for shareholders. Maybe not a great thing for like a junior marketing person at the company. I don't know. I don't understand the experience anyways, but shareholders would benefit from him going full Icahn, full activist. I'm 100%
all right.
believe in
Jeff, before we move, I can't speak for some reason. Before we move on to Lance, can you tell me, what do you think about inflation? Do you think we're starting to peak out, or do you think we got a lot more to go?
I told you PPI is a leading indicator. So the CPI is going to come up following this PPI. This PPI is going to get passed through. Even if oil comes down, even if I remember like 6 months ago, wood started going up and then it came down and people were like, you see, there's no inflation. I'm like, well, if I could eat a wood sandwich, that would be freaking amazing. But PPI is leading CPI, and they're gonna charge everybody. They're gonna pass it through, and you can blame the greedy corporatists and the bad guy running the gas station down the street. But that's all hooey, for a PG word. That's all hooey. We're not stupid. We know this thing's been going on way longer than one guy or one war. This is a phenomenon. They took the balance sheet from $4 trillion to $11 trillion in 2 years. Yeah. What do you think is going to happen?
Yeah.
What did they think was going to happen?
It's
like, take an economics class, everyone out there. Stop getting your talking points from bumper stickers. Sorry.
Jeff, what about, before I move on to Lance, let me change the scenario just a little bit. What about a year from now? What stocks would you be buying right now for a year from now? Hold.
Is that for me still?
Yes.
I'm still the inflation trade. You're
still the inflation trade.
Hard assets, energy. There's no way around energy. Even the most environmentalists of our soy boy friends have come to the conclusion that we do still need fossil fuels to make the whole damn thing run. And so Musk included, he's been like the most unbelievable pioneer, you could say, of ESG investing in our lifetime. And he has been on record as saying, we need more gas, we need more oil. So I think oil goes substantially higher. I think all hard assets will. Inflation trade keeps going. The one trade that I've cooled on is the financials. JP Morgan came out and they're really they had the shortest earnings report call in their history today, this morning. They had nothing to say. And Jamie Dimon was like, oh, well, I'm kind of optimistic, but, like our deposits are not growing at all, guys. Like, it's like, we're not getting any more money.
Right.
So of course not. There's no, the money's being drained out on expenses.
Yeah, I'm actually bullish in just a few bank stocks. I don't think the bank stocks are going to do as well, especially the large ones, as they were expecting. So you got to be really careful with that. Lance, let's move on to you for a few minutes. What is, in your opinion, what's the top sector and the top stock that you're focused on for the next 30 days as well?
Next 30 days, I mean, everything I'm watching is basically earnings. So you're kind of in that binary event of what the earnings reports are going to say, right? That's when stocks move, is earnings. I will say this, and I guess for consistency, I continue to see steel and energy are the two sectors out there. So you can look at XLE for energy and XME, the metals and mining ETF, which has a lot of the steel names in it. I mean, those are the two sectors that consistently going out in time see really, really solid flow. So to give you a couple of names, energy, MRO, Marathon, it's just been an absolute beast. It's starting to consolidate up here around 26. And this is stuff not like for active short-term trading, for stuff if you like to buy and hold positions for 2 to 4 months or so. I've been looking at that one. Oxy, Occidental Petroleum, just an absolute beast. We actually saw in the trade room today a trader come in and buy the July 70 calls with the shares around 59. That was a cool $2 million bet. And obviously Buffett in Oxy, and we've been seeing a lot of flow there. And then I still like steel. So you can look at Cleveland Cliff, which has been a beast, and then U.S. Steel, letter X.
How about Nucor?
Nucor, I love it. The only bad thing with it is it's darn expensive and the options are pricey. So it's kind of hard to swing trade a couple months out unless you really want to spend $4 or $5+ for options, which I know my guys, they like the cheap options. So that's why I usually stick with X or Cliff.
So, and in case anybody's curious about my 5 cents, I believe that the sector to watch right now is going to be the basic materials sector. If you look at the basic materials sector, you will see that the all-time high, not the trading action, but the all-time high is right around 91. We're currently trading near 89. We're less than 3 points away, less than 5% away from all-time highs on the energy sector. In terms of specific stocks that I'm really in love with right now, let me give them to you right now. It's Mosaic, this stock right here, which happens to be the strongest stock in the S&P 500. I like FCX quite a lot right now. Also one of the strongest stocks. I like SQM, which has a lot of upside potential in my opinion. And I like the following, which is kind of controversial right now. Albemarle, and hasn't been doing all that well. Yeah, I thought it would be doing better right now, but it's not. But I still like that stock. I think the basic materials. Again, I'm looking at the low hanging fruits right now, and I believe that those are my favorite stocks. I still like the energy stocks, but I believe that energies. I think about 80% of price discovery is priced into the energy market. I think we've seen a lot of bad news And also, if you look at historically, the last time we had a war with Ukraine, Crimea, it peaked out about 3 weeks after the war started, and 4 months later, energy prices were half the price. So, and I don't know if that's going to happen this time around, but I do know that usually during war, things like energies peak out, whereas basic materials, I believe it's going to be a very similar situation as we had with COVID, where all the goodies where actually prices were moving higher during COVID, and then we had a need afterwards. Okay, well, let me ask you this question. That's a fair question, Al. Jeff, let's start with you. What do you think some of the weakest sectors and weakest stocks are? Are you still Kathy Woods all the way?
Yeah, I don't think we can move constructively higher until we make like capitulation lows in I guess what the British would call the dross or the crap. I think those crap stocks really need to like totally implode. People that like did the last hurrah calls and these things need to totally give up their hand and say, oh my God, it's over. I still get, calls from private equity guys and this and that trying to like peddle shit on me and drop bags of deals that nobody else wants at this point. Because they're still living in this like 2021 easy capital world where people would just stroke them a check for 25 G's and be like, yeah, that sounds like an awesome deal. I don't care, whatever price. And I don't think we're not in that environment. I know for a fact we're not in that environment anymore. So I need to see no earnings, growth stock, make new lows, meaningful lows before we move higher. And I think it does happen. I actually do think it happens within the next 60 days with the shock hikes we're going to get. I think we're going to get a shock move higher still in rates that we have not seen. Maybe not too much higher, but north of 3% on the 10-year treasury. And I think, yes, we're going to have a ARC new low. And so look at the worst dog shit in ARC, and those are my worst stocks.
I couldn't agree with you more on that one. And last question before we conclude is, what's your take on the TLT, on the long bond right now in light of all of this drama that we're seeing?
Yeah, I think we get a shock move above 3%. I think we'll get like another, maybe another 25 basis points north of 3% on the 10-year. I think we'll get the 30-year mortgage close to 6%. I think the stock market falls out of bed. We get like another 10 to 15%, about 25% down on the year on the Nasdaq. I think the S&P will be close to down between 15 and 20% on the year when that happens. And I think that's probably going to be the low for the year. And then I think they, will rally through the end. I think we get a red wave in November. And I think maybe I'm being a little bit wishful thinking on my part, but I think we make a low this summer in the stocks.
That's very possible.
I know, people say you can't, like, how can you predict this stuff? You can't. And I'm wrong all the damn time, and I'm super wrong. And I'll probably be super wrong on this one. But you kind of have to have, it's like, you have to visualize how you see things playing out on some level and then adapt it with new information.
Makes perfect sense. I appreciate that, Jeff. And I appreciate your honesty and transparency and giving us all this information because you're very specific. And I really like that. And I know people at home really appreciate that. Lance, what's your 5 cents? You want to give us some specific on the bond market, what you think, and about your overall analysis?
Yeah. So interesting, because you know me, I'm not a big bond. I'll look at bonds like in the morning and the yen, but I usually don't look too much into it. But yesterday, interesting order hit the tape in TBT. So TBT is inverse TLT, if you want to pull it up, Roger. So as TLT goes down, TBT, there we go, goes up. So obviously very bullish chart with bonds or TLT right near the low, even though it's up about $1 today. So a trader came in mid-December and bought 10,000 TBT June 19 calls. Yesterday, they sold them. So they spent $1 million, sold them for $4.5 million. So they bought the options around $1, sold them at $4.5. So it was a $4.5 million close. But they didn't stop. What was interesting was they closed those options, they took profits, and then they rolled to August and bought the 24/30 call spread. And that trader laid out about $4.5 million for the August 24 calls, and then sold the upside call, the 30 calls, for around $1.6 million there. So a nice layout. You're looking at right around $2.9 million of option premium. And, if you have TBT print, let's say the profit is capped at $30 on the call spread. I mean, that trader's looking for a move lower in TLT, so higher in TBT. I thought that was a very interesting bet because they didn't just close their calls. They increased their exposure. So they use those profits to increase exposure. If you do the math, they made around $3.5 million in profits, and they just rolled those profits out to the August bull call spread. So very interesting trade.
Very interesting. I personally,
yesterday.
In my humble opinion, I think we are going to have a swing low for the next couple of weeks, maybe consolidate and congest, maybe go a little bit higher and then come down. I'm going to be looking for an entry to the downside. I want to sell the bond market. I'm hoping to get a little rally because we haven't had any rallies. I mean, look at this trading action. I mean, not much of a lift here. You know what I mean? It's like you can't. I'm hoping.
You know what's happened in the last month, in the last few weeks? The Fed has stopped buying bonds. They were still buying bonds last month in March. In April, they were not.
Right. So they've become rather listless, which also has an impact on implied volatility, which I don't want to get into because that's a whole other topic in itself.
It was just a fake market. Like, what should bonds yield if you have 11% inflation? Should bonds yield 2%? They should yield 7%, 8%.
It's insane. 2%. The disparity right now in the economy is just awful. And honestly, folks, we have nobody to blame for this but the Fed. They just they needed to start taking action a year and a half ago, 2 years ago, and they have not. So
it's a lot like getting out of a bad trade, man. You know the trade's gone bad early, but you don't want to deal with it. You think it's going to get better, and you just like hopefully it gets better, and then it gets worse, and it gets worse, and it gets worse. They could have dealt with it. It would have been much. We would have had a market correction, 15%. We would have moved back up, but we would have known the problems dealt with, and things would have been fine.
And the most reckless thing was all this led to so much speculation and hype, and so many. From SPACs to meme stocks and all this stuff, which sadly suckered a lot of people in. And then now look at the aftermath of them Wall Street and a lot of these private investors, got even richer off of that news.
Yeah. And Lance, COVID did not help.
Or that time period, I should say.
You know what I mean? Like during COVID, that's when all the craziness was happening and there was a lot of unrealistic expectations during the last 2 years in the market. I think that's what it is. I think if the Fed was a little more stern and a little bit more upfront, if where we're at 2 years ago, a lot of this would have been avoided. I think, and again, I'm speculating, but I think about 40% of the crap that we're seeing now, 40 to 50%, not all of it, obviously, but 40% could have been, if they dealt with it head on, we would probably be almost out of this, out of the pain instead of just getting into the
so
pain.
Well said. And
I know you've been saying that. And Jeff, you've been saying that for 2 years.
And they would guess what? They would have the ability to lower rates in the recession that we're getting.
Yeah, they have no.
Now they're raising rates into a slowing economy.
Yeah. They have no. They're out of ammo. They have no ammunition. All right, folks, before we let you go, and Jeff and Lance, I know you guys are really busy and I know your time is valuable and I want to thank you for being here. And before we let you guys go, I'm actually have something to pitch today. So I wanted to highlight, I got to pitch something too sometimes too, right?
I'm excited. I want to hear it.
So I want to highlight some of my recent trades and not only show you to them, but teach you exactly how a small group of traders, and I discovered these opportunities every single day. These are the actual trades that were closed in my VIP PP program. Those are the trades. Those are the actual closed trades. So far, we've been doing pretty good for 2022. We've won 11 out of 12 trades. So our win rate has been solid. This is no BS. There's no creative accounting. We don't roll over debt. This is just in and out. In and out. We don't do any creative. I don't have an accounting degree. So we just do enter, exit. There's no like weird accounting stuff. There's no BS.
No cost average roll.
No cost averaging, none of that stuff. We just enter at a price and we exit at a price. And that's it. Simple. I don't know about all that other stuff. And we've done all that. We've had 11 out of 12 winners while the S&P has looked like that. That's been since October 1st, actually. So we've been able to get a 92% win rate on our closed trades in 2022. And I'm not kidding. Wow. And I'm not joking with you. That's real. That's real. So we trade my high velocity pullbacks in my VIP room. We get in on a strong long-term trend. When the short-term trend moves against us, we wait for a reversion, and then we get back in. So on Moss, we had a great winner. We had a pullback. We had a 20% gain in 4 days. Similarly, on Micron, 22% in 5 days. VXX, we had a bonus trade. This is when they announced that really nasty news, and I just didn't want to hold it anymore. I got this trade idea from Jeff. So Jeff, thank you for this one, by the way. That's because of you. I appreciate that. So not only, 92%, but the market
That's
hasn't
amazing.
been really.
That's
Yeah,
amazing.
well, in this market, the market's been kind of bad, right? So my members have been very, very happy. So today, for roundtable attendees only, I'm going to do something I've never, ever done before. I'm going to invite you to start trading alongside me every day, 2 p.m. Eastern time, and Friday at 11 p.m. Eastern time. Inside my completely done-for-you trading service and community called for you, my VIP trade room. For the lowest price ever, I want to give you guys a deal of a lifetime. Times are tough. Inflation is, as you know, at the highest level in 40 years, and the numbers today weren't great. The last thing I want is for price to keep any trader away from my community. So I'm going to do something crazy today. Every Monday through Friday, we meet for 1 hour every day. That's 20 hours a month, even Fridays. You get exclusive trade alerts. You get my VIP academy, all the goodies. Everything is transparent. You get all my codes, my algorithms. We even give tons of bonus trades. People love it. You get my morning videos, all of it. We get the position tracker. You can see all my trades. You get my quick start guide. You get my hot stocks, and you get me for an hour every single day. You get my Floor Traders Edge, which is a day trading program, VAP hotline. We've sold this for $5,000 3 years ago, and we sold out. We're going to do something crazy. I'm going to give it to you for 1 month for $97. That's 20 hours of my time, plus all the stuff we're coding, all the stuff we're doing right now. I'm going to open up the chat for everybody, and I want the people here who are in that program to tell the people here if it's worth it. All right, because the feedback has been amazing. And again, it's $97. It's from 2 p.m. to 3 p.m. Eastern time. It's recorded. It's in the members area, and it's full month's access. Do it now. Go to wealthpress.com VIP. And if you're in that room and if you've been benefiting from it, if what I'm telling is the truth, I haven't talked about the algo program that we've been doing. I haven't been talking about the back tests that we've been doing. I haven't been talking about the pattern trader that I've been talking about there. So if you're in that program, just let the people here know if you like it or not. I'm not holding anything back. It's completely transparent. The chat is open. BB, Don, Germano, Evelyn. I've had people in there for 3 years. It's the hardest thing I do every day. I put my heart and soul into it. Really want you guys into it. Bob says VIP room is great for me. Jeff says best place to get down. Different Jeff, not Jeff's in there. Different Jeff. Great service. Love the service. Something negative. VIP room was twice a day. I can't do it twice a day. This guy started trading on his own after this. He's literally like John started doing his own. Like he's a full-time trader now. So it's a special 1 month price. I believe once you get into this room, you will never, ever leave. And we've had a 92% success rate in this crazy market. Take advantage of it. Sorry,
Rochelle says, I'm lifetime and love you, Roger.
Oh, thank you. Thank you, Rochelle. Thank you very much.
Love
Lisa,
you, Rochelle.
You have not subscribed yet. I highly encourage. Yeah, it's great. And this is an opportunity, $97 for 1 month. David says Roger's the most accessible professional trader. Yeah, I give you guys my email address. You can send me emails at all times. Like today, for example. So Lance and Jeff. So let me tell you what we're working on right now. I wanted to tell you guys this. I think you guys will love this. So Jeff, check this out, and Lance. So you guys know candlestick patterns. We have coded 26 candlestick patterns. We've run them back 28 years to see which ones are profitable, which ones are not. And now we've done them on the S&P, on the NASDAQ. We've tried adding filters, and we do this live in the VIP room for my new program we're going to be launching in the next couple of months called Pattern Trader. So people in there know all of that stuff, all of what we're doing. They know the entire thing, and they absolutely love it. So again, I want to thank both Jeff and Lance for their valuable time. They are very busy. These guys are content machines. So yeah, what I'm talking about is really cool. It's very, very cool. I want you guys in this program. It's my most fun time of the day. As you guys can see here, the feedback is great. I'm not trying to sell you guys. I'm just going by what people who've been in that room for the last couple of years are saying. It's a really, really good time. It's a great experience, and I think you guys will love it. And again, you'll learn all about my new pattern trader program that's going to be coming out. So again, thank you guys. Thank you, Jeff. Thank you, Lance. I love.
That's an awesome deal. That is an unbelievable deal. I'm sorry, I don't mean to like try to put on my like sales hat here.
Please.
But I'm kind of blown away myself. I'm like, do I need to start doing this? Maybe I will. I don't know. Maybe post spring.
We'll come in the room, Roger, with you.
Yeah,
please.
We gotta get booked to come in with you.
I'd love it.
To get that is wild. It's wild.
You guys have a lifetime VIP invitation. Both Jeff and Lance, please come in anytime.
We're like combating inflation single-handedly with this offer.
We got to do something
Dollar
for our
Tree.
guys. But I'm gonna say, and I'm gonna just say this out there. I am a little bit more bullish than Jeff is right now, but I'm gonna say this. Without Jeff's feedback right now, I would be doing so much worse because he puts reality into me every day. So by listening to Jeff, I'm like, you know what? He's right. I got it.
I'm sorry. I don't mean to be negative.
No.
It's I really don't.
I get emails like, Roger, what's going on? You're bullish. Jeff is bearish. I'm like, we're different people. Don't you want, like, do you want us to all sing the same song? We're different people. We have different experiences.
But I'll tell you what, if I am right, what follows that period will be the easiest big money making opportunities since 2009, which was like back the freaking truck up and put the cash in the back type of situations. And those are the kind of situations I'm looking for, where it's like, I was buying Bank of America at like $4 a share. Like, can't miss opportunities. I'm not saying the banks are going to go to that. That's not what I'm saying. Don't misread what I'm saying. But there will be pockets of the market where it's just like, cannot believe how cheap this is. It's beneath book value, like value trading type of situations that will last for a couple of years. So I'm just trying to keep everybody alive to get to that dance.
Right. And all those stocks that Jeff is talking about, even if you don't agree with what he's saying, or you think the market's going to go up, it's really good to have those positions in your portfolio because it'll ground you and it'll reduce your volatility. So your account isn't going to move like this every day. I have professional traders who follow our stuff, and they tell me, Roger, just give me your 3 weakest stocks. I just want to have them in my portfolio, not so I can make money on them, so we can ground my exposure a little bit. So again, even if you guys are not bearish or really, really crazy bearish, you want to follow what Jeff and Lance is saying, especially on the bear side, what Jeff is saying, because what if he's really bearish on a stock that you guys are long right now? Probably a good time to get rid of it. So there's a lot of different ways to play this, but we're trying to keep you guys out of trouble. And again, this is just another way of us trying to do that. So thank you for all of your time. Jeff, you are invaluable to Wealth Press.
I would say like the two things I've been the most negative about in the last 24 months have been Chinese stocks and ARK, and both worked out pretty good if you listen. And you probably could have avoided some bombs. But, I'm not like
and travel stocks too. Travel stocks.
I do like these trades that Lance is doing. I do like these trades that you're showing too. And there's definitely there's awesome bullish looking charts. They're just not, like some of these charts, when they start peaking up, those are places where you can unload some of your bad inventory, or you can lay into some new shorts.
Well, thank you very much for that feedback. Thank you for the info, folks. We've been getting just a great feedback here. Jeff and Lance, thank you once again. I'm going to put my phone number, my email here. If anybody wants to email me with any questions, I have a virtual open door policy. I think I misspelled the email address. Let me give it again here. There we go. So if you guys want to reach out to me, please do. Jeff, do you mind if I give your email address?
Sure.
It's Jeff at Joy of the Trade. Let me just write it down here. Jeff at joyofthetrade.com. Lance, what email are you using, if any, at this point?
Lance at New Money Crew.
Lance at New Money Crew. I love that. Cool email address. I got to remember that. Now I know how to communicate with you outside of Slack. Thanks, guys. It was a great session. We'll catch you next time. Please tell your friends neighbors, relatives to watch this show. It'll keep people out of trouble. If you're watching on YouTube, please like our channel, comment, subscribe, and all that other stuff. Am I right, Lance? Did I get it right this time?
Yes. Like, subscribe, leave a comment after the live stream, or if you have any questions, you can write it in the comment section and we'll look at it for next week.
Thank you, guys. Bye. Have a great day. And thank you for supporting me today. Bye, guys. Thank you.
Thanks, guys. Take it easy.